Good morning. Good morning. All right. So markets are stalled here a bit. Not much happened yesterday after the gap up a little bit higher. You know, you can see stop there at the 320-ish level. Was kind of expected, the next whole number. So now we're right there, right? No change. Markets dipped there overnight a little bit, came back up. Buyers on the dip still, same old. Really nothing changing. So yesterday's gap up, again, things got to that number. They kind of just hung out there, and it looks like a bad tick. I don't know if it actually came down to the gap fills. I see it there. Yeah. And so up until proven otherwise, right? Simple analysis, bar by bar. Prior bar is low is the first reference point of support. And we go to a pivot, and so we don't have this as a pivot since there aren't three here, but a little common sense tells us that that is a reference point, definitely in a smaller time frame, that if that was to be violated, and as I mentioned yesterday, I think if Thursday's low was violated, you're going to get that's going to break like a twig, and then it's going to go lower. So until something changes, we'll assume that it'll go sideways to grinding higher and, be slow. There'll be pullbacks along the way, of course, but trend is up, trend is up, trend is up. And other than intraday, maybe shorts, something's extended. And this is not something that I would short just yet anyway. Trade other things that are setting up patterns that make sense to do so. Right. So one of the great things about, say, if you were to just trade spiders or Qs or the futures, is that you're not dealing with all the scanning to find what's moving. On the other hand, when these are kind of directionless or gap and go nowhere, you're kind of sitting there, if you're disciplined, doing nothing, waiting for things to set up. Or you might be tempted to trade things that aren't part of your trading plan, and that may not end up well, getting chopped up. In any event, having a diversified list of things to go to when one market or one particular, you could even trade it. You may be a trader that just trades, 3 or 4 or 6 different stocks day to day, and that's also a choice. So we don't have to look at 1,000 different stocks and whittle it down day to day or week to week to whatever. So, trends up. Let's see if it continues to go up. Qs. So you can see the tail is out there because that was a bad tick in spiders. And for those of you that are using the spiders as a market guide, if you get a bad tick in SPY, you can go to SSO, which is the leveraged ETF. So that doesn't get as many bad ticks as spiders, but the good thing that doesn't happen every day. So same story here. They got the breakout. Now we have a gap there. Looking at this intraday and overnight, that level is going to be something to keep an eye on, since now it's making a little trading range in between those two levels. And if this, now that it's here, there'll be some sellers. And if it was to break below, well, that's going to open up the door to something lower, because as you can see, there's little to no support there. So from the bull case, you really want to see this move sideways here at the open, or just take off to the upside and maybe, get up to 210, or which isn't very far away. But as prices begin to accelerate higher, odds are it's going to stall. I mean, unless we get a climactic run for whatever reason, some new tweet comes out, or China, whatever, and it runs straight up, well, that would be a pretty good sign that this move is near its end. So we'll see what happens so far. We'll take a peek on internals. It's still not into the red zone here on sentiment. Breadth is starting to get there, just underneath there. You know, it could take 1 or 2 good days to put us into a sell rating here on our internals. So we'll see. You can keep an eye on this total put call ratio during the day. You see this going down to you know, a 0.7 or 0.6, and we start seeing high NYSE tick readings as this accelerates higher. You should probably think about taking some money off the table. We'll see how it unfolds. S&Ps, just a little narrow range, right? Day's just getting started, but you can see the trading range quite clearly on the S&P since they trade more actively. So here we've got a little range, and there's our line in the sand, and you could associate that if you're trading SPX options. Well, they won't expire till tomorrow. That's the next expiration, but that might be a consideration as a trade, a call spread up above here. If this breaks down below this little bottom of this range there, and then we'll see how far down it comes, if that's going to happen at all. And similar patterns, right? We've been talking about that for a couple of weeks now, at least, right? Where we're seeing similar patterns in these various markets. Not exactly the same, but a lot of similar patterns. And so we can see here things getting a little far from support. Really not that big of a deal yet. We're able to get through that 8,600, so maybe 8,700 is the next reference point, since there's nothing in between here to stop it, unless you want to get out your fib extensions or wave counts or all of that kind of craziness. But look, the further it gets away from some price support, we just use a moving average as a visual aid. But the further it accelerates to the upside, the more likely of a pullback. Now, that's a concern, of course, not to buy as things are or prices are getting accelerated. But the good thing about prices getting away from this point, right, which was resistance, is that pullbacks from that point, while could be more substantial, there's little likelihood of it violating the trend because you've got to come all the way back down here. So a pullback in a nice uptrend like that, we always look at it as being viable. Oh, and Alex is helping me out here to let me know where the fib extension is. Thank you very much, Alex. I know you are. We all have fun here in the room, right? We can joke a little bit. So everybody knows that why do I have this obsession with telling people not to use these things? Because I used them for a bunch of years trying to figure it out. And after the brain damage set in for a little bit, I said, you know what? This stuff is bullshit. When it works, it seems like it's magic, but when it doesn't work, and not that, what I'm telling you, support and resistance works every single time, but between bar by bar analysis and understanding failed patterns and multiple time frame analysis, the consistency is far greater looking at what's real prices and understanding that than using, Elliott waves and fib extensions and so on and so forth that have some mystical powers of determining where these reference points are. Anyway, that's my spiel for today. YM obviously is weaker. Boeing down again today. Clearly they've got their troubles, but you know what? Maybe it's closer to an end now that all this back and forth of, rounding it. Now they're saying, well, maybe, who knows, maybe they're not going to fly him anymore or whatever they're going to do. Sometimes the worse things get, the more dire it looks, the more you're near an end to that. And it is down near some major support. Dan can take a look at that for you. Anyway, looking at this different picture here, you can see it finally was able to clear these highs where it was getting rejected Thursday and Friday and closing back underneath it. So we got to close above, and so far it's holding. And if Boeing can get off that major support, well, then the Dow may play a little catch up. So we'll see what's happening there. But right now it's showing some relative weakness, and you can see the difference. What I said about go back into the cues here, the distance from support, and if it starts to pull back, you really don't do any damage, well, unless it comes way back. But it can come back to where buyers want to get in and no damage being done. Whereas YM doesn't have that luxury, so to speak, of it starts to pull back, and the depth of retracement, right, which Dan and I covered was last week, depth of retracement as an objective measure of strength or the lack thereof. The Dow doesn't have that little space before it starts really putting the trend in question. Russell grinding, right? Some profit taking on the pushes, but it doesn't get down to the prior day's low. So, you know, this is the concept of bar by bar analysis, is that, well, red bar was deep, it came back. Next day is a green bar, it's going up, it's getting sold, but it's kind of like a grinder, a self-correcting uptrend. So, a similar story with the support here. So we'll see where it goes. You know, it's already had a nice move, and as I'm looking at this, you know, we've talked about the void that's above. However, we've got a little well, this is about as esoteric as I get with saying how far something may go, right? So you go like this, and you kind of, a lot of patterns have these what we call measured moves, or where you have an initial push and then it kind of ends near the next similar lengthened push. So somewhere up here, and you know, maybe it actually gets to 1700. Right, that's a round number. So we kind of look at things like that and say, you know, that would have been my focal point anyway. But this is a kind of a reference that, you know, you see a lot of times where moves get made and they stall, and then they do the same kind of thing like that. All right, oil continues to push up into, well, you can see the void here. At this point, none of this matters anymore until it gets over here, but that'll come into play. But you know, all of this stuff, who cares? It's like this has been done with. So we're looking now, oil can push up there, and if we look at, you know, the intraday time frames and how far, get a little more data there, you can see there's just nothing there to stop it from going up. You know, so the idea of a momentum move creating a void, you can see the concept right here. So there's nothing to stop it from going higher until it reaches that point up there, and then we just follow the trend. Oh, this is what we call major support, and it's trending up, and this is what we call minor support. And so you could see it was a dip down there, buyer stepped up, and so we just follow the trend, bar by bar. Bonds up here a bit, just nothing going on there. They're just hanging out there near that bottom of the trading range. Big bar so far, no lift off. Gold, kind of dead in the water there. Just consolidating. We got a big red bar ignored, and it came back up. And, well, topping tail at that resistance. So it's trying to, well, not trying, it's consolidating here. And at this point, we really don't know which way it's going to go for sure yet. But the ability to hold this level as it did, it's a plus. It hasn't quite pushed past this halfway point. So that's what we're keeping an eye on. Silver, same story, kind of messy. And the transports, these transports need to get in gear here, right? So I don't know if they're going to lead or not, but just set an alert, set an alert around here to see if they start perking up through this level. So just keeping an eye on things. And I know FedEx was down a bit on some Amazon news, so that may not be a plus for the transports. But, we got differences in markets where, Q's technology is going up, transports are kind of hanging out doing nowhere. And thank you, Alex. Alex saying FedEx earnings after the close. So, that's it. Markets are trending up. Some markets aren't participating as much, and just find out what's moving and stay away from what's not. And it's interesting to take a look at these. This was kind of a crazy move last Thursday, where the retailers look like, wow, maybe they're going to really take off here for the holidays, and they get slapped right back down and, doing nothing here. So anyway, it's that kind of a market. All yours, Dan.
All right, thanks. Good morning. And I always like looking at Cousins, FedEx, or UPS here. Yeah, it's going to move with FedEx tonight, but McGraw, it's a put spread candidate. Let's see. So all our opens are fine except this Boeing again. And we said into the close, I said, look, I can't. It is what it is, right? Objective or subjective. I said it looks horrible. So I know some of you got out on the bounce yesterday, some of you into the close, and now it's gapping down more. But we're still not near max loss because we have the time value. So I'll keep an eye on the midpoint, and we got to just decide here: are we going to sit through this and roll, or cover half or all, or whatever? But I'll be monitoring it. All the others look fine. Sina, this was a very beautiful gap right there trade 2 days ago, gapping through this multi-week consolidation. I don't know what's up with it today, but it's getting whacked down here. Nothing to do. Cat, I just saw Kramer talking about it, and the reason I want to watch this, McGraw, you know the answer. Over yesterday's high, this is a bullish trading range with a price void on the weekly and monthly. So if it can take out yesterday's high, then it's red bar ignored breakout. So I like it. Set an alarm. And yeah, I have that teed up for us for an MT Live for next year. Tomorrow we're doing one on year-end review, looking at next year, and also garbage can dumpster diving, sponsored by Debbie. I saw this thing taken off this morning. Look at that, just doubled pre-market, and now all the way back down. That's craziness. Looks like pump and dump city. Cars, I think the CFO is leaving, but no pattern. Groupon CEO is leaving. That looks damaged. I haven't looked at Groupon in a long time. Lilly, I think they raised their dividend, so it's up, but no pattern. Boom, I think it had earnings or lack thereof, 47 bucks, bearish gap, but no setup. Stoll, I think, gave some guidance on earnings, but the steel stocks have still been lagging. HEI 130. All right, this is a 30-minute high candidate. Had a small retest here and is gapping over a bunch of bars. Buy setup on the weekly. That's definitely worth watching. Put him here. Oh, Amazon. I also posted into the close yesterday. a put spread, and now it's gapping up. So we're gonna have to work an entry. We aren't gonna get the desired credit that I wanted because of the gap. WOR 4050, that's junk. I'm just deleting you. NAV 3060, bearish gap, 30-minute low candidate. Now, even though this is not, you know, a penny stock, this something like this would be on our list for the dumpster diving review tomorrow. Wow, look at that beautiful retest on the weekly. This is the picture that we're looking for. Way oversold, and I need something to tell me that it's ready to change trends from sideways to up. And yesterday was the day. Look, beautiful breakout, rising volume, converging and rising 20 and 50. This is exactly the picture, folks, of what we're looking for. Maybe I'll grab a screenshot of that for the some of the PowerPoints. Pan W, McGraw just sent me a note saying it's breaking out. I'm not crazy about directionals like this, but I'm fine for a put spread, McGraw. So over 10-minute high, whatever. The low is 224.58. So, you know, anything under that. Jable, we had as a core long. We had it as a core long on this day. Look at that beautiful gap breakout. So we went core long that day, and we were selling calls against it. And then we finally stopped out. But we re-entered on that day right there. And then we legged into a covered call, and we held it for a core trade. So it's coming in a little bit, but you know, we've got a locked in beautiful profit. This is sloppy, gapping up big. You're a mess. I'm just getting rid of you. UN, it's an ADR, it's sloppy, 50. Ooh, that's an ugly gap. Ow. Look, it's gapping under this weekly engulfing breakout. So all these people who are still holding long are now in pain. But I'm not crazy about ADRs. PTI, the little bio stock that's been on fire. Roku had a nice day yesterday. Gapping down, no pattern. Win is nothing except a watch. You know, these things were blasting off the other day on the China news, but it's a nice bottom, daily, weekly, monthly. So let's keep an eye on this for a put spread and or directional. There's Lilly again. TGE, I think is that's a buyout. Boeing we talked about. Baidu was on our list yesterday. I love the weekly, but it's up. You know, I like the red bar ignored. Weekly target 140, 150. That's staying on my list. RTN, I like. What's today? Tuesday. I like over Friday's high. MDT had a nice breakout yesterday. That's worth watching. Autodesk. Put spread under here. I think I looked yesterday and there was no juice. Zion, this is a 1, 2, 3. If it can get over those red bars, that looks great. That's another example of red bar ignored. If it triggers, it looks fantastic. So then we got a price void on the weekly and monthly, and if it doesn't trigger, we don't care. And then apply retracement principles from last MT live. It just needs to stay in the upper half. And that's why Greg talks about our factory work, because we just apply the principles to whatever card is dealt to us. But we have the tools. Square, Greg mentioned yesterday, maybe half over yesterday's high. Red bar ignored on minor support here. McGraw, did you check out a put spread on this yesterday? CXO. Hey, George, your drop down, please. Yeah, we did a 1, 2, 3 here on the breakout, same day as Halliburton. Halliburton was just a no-brainer 1, 2, 3. This was the best of the OIHs. Debbie mentioned this yesterday. I would love a 1, 2, 3. Crack. Alex got us onto crack yesterday. So that's a new long position for us. Looks great. Light volume, but I entered it. EOG, I like this red bar ignored. If you want, more oil exposure, we got to find the ones that are not extended. And I like this one because of the red bar ignored. Target somewhere up here. SDIV, Alex mentioned that yesterday, reverse head and shoulder breakout on the weekly, but I want to pull back. ANET, one of those bottoming patterns again, but if you can get a 1, 2, 3, then a put spread. Uber had a nice day yesterday. UNH on a pullback. COM, actually the one that was Alex, your 1, 2, 3 triggered yesterday. Actually, I love the weekly. Look at this Boeing this week. So Greg, if you're listening, we got to decide what to do with this. The midpoint is 775. So if you were to close it right now, we're not at max loss. It's tough. Well, for now, we'll do our 30-minute low.